I'm using the main buy term invest the difference. And so what we're able to do here is illustrate, well, what if I invested the money? So this is an actual case. So we've got this in process right now where the client's 47. We're going to fund the policy for 13 years. So I did run a term comparison. So down here in this module, you can click the premiums button and it brings up the term. So the same relative term, this is a bad number, but we'll update that. 1.7 million worth of term. I use 13 years to keep the math real simple, but it's an actually 10-year term policy. Or you could do a 20-year term and drop it off after 13 years. Again, a little bit nitty gritty on the details, but the term details are here. I'm using 100% ordinary. You can toggle with this if you want. You can go 50-50. It does it for you. Again, I'm going to do 100% ordinary for this purpose. And we're going to pay taxes from lifestyle. So this number's here. We're going to do 50,000 a year into the investment at 4% for 13 years. So what our next screen tells us, here we go. All right, you did 13 years of 50,000 compounded at 4%. Our 864 would be our balance. So we spent 650. We get 864 at 4%. So again, this starts to then break down and show you the 864 looks pretty attractive, but most of that's still just your money. So you have to recognize that a large portion of that account balance is just your original principal. Additionally, we had to pay some taxes along the way on that account, $64,000 worth of taxes. So again, this says, what do most people do in this kind of a scenario? We're beating this point to death, but it's an important point. It's paying taxes from lifestyle or letting it reinvest. So here, we're letting it reinvest, so that tax hit we are not taking from the account. That means your money came out of your lifestyle to pay the taxes on that investment, or if it's a business owner, it came from their business account. And then the system just shows you a pretty neat calculation that says, my taxes on that 50,000 have grown to $9,900. So it depends on how long of a scenario you're doing. This will actually calculate when the taxes will be greater than your annual contribution that you were making to that account. So this is where you can then talk to them about opportunity cost. You know, if you're paying taxes that you didn't have to pay, you're not only losing those tax dollars, you're losing the money that that tax dollar could have earned for you. So now we start to break down what that actually looks like. So we had 650 invested, we had 64,000 in tax. That 64,000 would have been another 10,900 we could have earned had we not had to pay that 64,000 in tax. We also paid term premiums. So that term premium is gone and lost forever. It's a lost opportunity. What could those term premiums have earned over that same period of time? So this module just starts to break down all the pieces of that puzzle. In this case, I didn't do any capital gains. So it says 0 capital gains. If you toggle that number, it will calculate that for you, so you can see truly where it's at. Then at the end here, you can say, okay, well, where did we really end up? We started and ended with our accumulation of 864, but we put in 650. We had taxes that we were avoided. I'm going to switch this. My apologies. So we're analyzing the investment side, and you can toggle this. I'll do that in a second. So we start with 864. We put 650 of our own money in. Our lifestyle paid $64,000 in taxes. We didn't earn $10,908 on those taxes. We paid our term premiums. We didn't earn $10,730 on those premiums. And in this case, we had no capital gains. So then we say, all right, well, what if we had done a permanent life insurance policy? So now I'm going to go out to my permanent life insurance policy here. I'm going to go out to year 13. And our illustrated value down here is 833,045. So I'm going to come in here, 833,045. Now, I didn't enter the number. You might often have to enter the number. You click in there and you tab through it, and it will give you your number. So in this case, our 833 is $86,000 better than our investment account at 4% when you factor in all of the real scenarios. Most people have no idea the rest of these things are happening. It's lost in their budget because they have no system for their money, other than when it comes time to pay tax, they're either draining their business account or they're complaining that I don't have this money personally. How could I owe this tax liability? And oftentimes the CPA or the accountant is saying, I don't know. All I know is the tax is owed. Nobody is getting into the weeds of how the logistics of that money is flowing to identify what's really happening.